The question to review now is length. This is a question about the investment appraisal, and you can start to read the background information because this question is also extracted from the past paper in the section B, scenario-based objective test questions. So if you finish your reading, you can just listen to what I will do the analysis for you and for each questions from question 1 to question 3. Okay, it's a question about the sensitivity analysis. And also the accounting rate of return or return on capital employed. Okay, so let's check. This company link has been prevented by the government from buying a competitor because of the government would like to prevent a monopoly position, and the company decides to expand the existing business operations. And the finance directors have prepared a following evaluation of the proposed investment project for the company. So the present value of key variables are here. Also, for example, the present value of the operating cash flows is also here. We have the net initial investments, then we can get the NPV is positive. Okay, the project life expected to be 4 years. And the finance director has used discount rate of 10%, and the investment project has no scrap value. Okay, so the project is considered to be financed by issuing of debt. So here is the background information given to you. So let's see what's the first requirement. The first requirement is asking you to check or to calculate the change in sales volume, which will make the NPV 0. Okay, bear in mind, we are asked to check the sensitivity of sales volume to make it the NPV is 0. Okay, sales volume. Then we go back. Sales volume, we check this table. What will be the variables affected if the sales volume changed? Is it sales revenue? Yes. Is it variable cost? Yes. So the present value of contribution should be affected. Okay. Is it fixed cost? No. Okay, so for the operating cash flow will not be considered as well. Then we will check the present value contribution factor with the net present value 511. The NPV of the project is 511. Okay, and the present value of contribution is 3,880. So, for example, if the present value of contribution is dropped by 511, the NPV will be 0, right? It's 0. Therefore, the sensitivity here is 511 divided by 3,880, which is here is the PV of contribution. Okay, and here is the amount to turn NPV into 0. Okay, times 100%. Then we got the number for these questions is 13.2%. So which is B. Okay, this question is asking about the sensitivity of sales volume, and sales volume is not only affecting the sales revenue, it's also affected by the contribution, the variable cost. So we have to adopt the contribution in calculation. So here we apply the formula, the amount to turn NPV into 0 here, and then divided by the present value of contribution. We got 13.2% as the sensitivity in sales volume to make NPV 0. Okay, move on. The next requirement is we are given 3 statements about sensitivity analysis. So please check which one is correct and which one is not, or is all of them correct. Okay, let us check one by one. For the first statement, it's saying that although critical factors may be identified, the management of link may have no control over them. Is it correct? Yes. It's also the limitation, one of the limitations of sensitivity analysis. Okay? Because in sensitivity analysis, you identified maybe sales volume. Okay, it's a critical factors. But can the management control sales volume? Okay, if it's the market demand, sometimes the market demands, you cannot control it. Okay, so even you identify the sales volume is the one of the critical factors to do the sensitivity analysis, but the management cannot have the control over them. Okay, because it, for example, it is affected by market demand. Yeah, market demand cannot be changed sometimes by the management. The second statement saying that a weakness of sensitivity analysis is that it ignores interdependency between project variables. Yes, it's also the weakness, one of weakness of the limitations of sensitivity analysis. Okay, in some situations, project variables are they are linked together. Okay, or the terms here is they are interdependent with each other. So it's the weakness of sensitivity because it only identifies one to test one variable each time. Okay, so it ignores the different variables interdependency. For example, we are talking about sales volume, right? We are talking about sales volume. We identify this is one variable, and the other one, for example, let's say the utility expense or utility cost. Okay, for sales volume and utility cost, if the production is increased, more electric or electricity will be incurred. But sometimes there's some bulk purchase discount. It means you use more, maybe the discount will be offered to you or will be granted to you in some case. Then the utility and sales volume, maybe you can say they are interdependent with each other, but we are only consider sales volume in one variable because we only consider one variable. So we ignore the other variables changes during the sensitivity analysis. So it's also correct. For the third one, sensitivity analysis can be used by the link company to assess the risk of an investment project. Is it correct? No. Why? Why not? Because sensitivity analysis is only showing you what will happen to NPV, for example, or what will be happen to NPV if it's zero. For example, when your sales volume changed by 7% or 13%, or say, for example, 13%, then your NPV will become zero. So it's only telling you the facts. It's not telling you about the risk. Okay, you cannot identify what's the chance for 13% drop in sales volume. You cannot identify what is, for example, 13% drop in the sales volume. Is it a high chance, lower chance, or what's the probability of it? So if you would like to say, to assess the risk of an investment project, the probability analysis is more relevant. Because you have different scenarios, okay, you have different probability assigned in different scenarios. So you can assess the risk of the outcome, what will it be, okay? So probability analysis is much more relevant to assess the risk of an investment project. But for sensitivity analysis, it only tells you what's the change or what's the percentage change of your variables to make NPV zero, but it doesn't tell you the chance or the probability of it to be happen. So the answer here is A. For the third requirement here, it's a calculation question as well. Using the average investment method and assuming operating cash flows of 729,000 per year, what is the return on capital employed of the investment project? Okay, here to recap, average investment method is the average profit divided by average investment. And first of all, we need to find out the profit first. If we are given 729,000 per year as the operating cash flows, and we need to find out the depreciation per year. And here, the background information is the initial investment is 1.8 million with 4-year lives, no scrap value, 4-year life with no scrap value. So the annual depreciation will be 1.8 million divided by 4, which is 450,000. So the profit for every year in the projection in a period is 279,000. Okay, and then next is here is the F is the profit, because in every year the profit is the same. So it is also the average profit figure. And for average investment, it is 1.8 million. Okay. Any scrap value? No. So take the average. It means the average investment is 900,000. By using the formula, okay, return on capital employed formula, we know $279,000 is the average profit divided by 900,000 times 100%. So what's the answer? Here is 31%. So the correct answer here is C. All right. So again, this question is again asking you about the return on capital employed by using the average investment method. So to remind you, we remember the formula and how to get the average profit here and also the average investment.